I wanted to show you the different chart patterns and talk about the S&P. So if you'll take this as your setup, watch and pay close attention to the companies announcing earnings, and especially the reaction to earnings. Kind of curious or interesting here that Apple, as we've been talking, they've broken the uptrend that we had. So if you were day trading Apple, the exit would have been hit. You would have had entries over here above the 10, and then over here on the retracements near the 10, we talked about the bullish engulfing candles. And over here we got a great Bollinger Band top and a price double top. And that right there is a clue to be real careful and likely exit even before a break of the moving average. Worst case scenario, you would be out of the trade as Apple broke down below that 10 exponential moving average. So now this also looks like it's moving into a pinch. So trading plan here is to hold out, be careful, let things go sideways, and wait for the next breakout of the Bollinger Band pinch. Jeff is asking, on Apple, you'd exit on that third spinning top candle, right? Close. So let me show you. Let's back it up. So right here, things look great on Apple. Still on a trend, beautiful bounce off the 10 moving average. At that point, on this candle right here, you can see by the end of the 5 minutes that it has closed without continuing to push higher and touch the upper band. That's a little bit concerning. Doesn't guarantee the trend is going to break, but it looks a little bit odd that you had a beautiful retracement to the 10, and then on the next rally, it only went up one candle, and it failed. This starts to look like a Bollinger Band top. So there are two things that I do with exits on this. One is if the next candle goes lower, and if it is truly a day trade, that is an exit. So you really can get out on the very next candle. Two, the second entry is exit is a breakdown below the 10. So if you're doing the fast exit, there is an exit right here around $100.50, right around there on that next candle. By the third candle down, that one breaks the 10 moving average and it's no longer a rising 3. So that is another place to scale out. So you can either exit everything right here on that candle, right at the beginning, or you sell half the position there and the other half when it breaks below the 10. And it's just a way that you're getting out because you know that you don't have a lot of time to hold through any sideways action. We know that Apple so far this morning has moved really pretty well, both down and up. It hasn't slowed down enough to move into the pinch like we usually see. So you've got to expect that that could start to happen here at any time, which it has. So when it fails to touch the upper band and after only one up candle starts to pull back, that is basically presenting an exit for us.